I promised to do a video on the whys and wherefores of gold price manipulation, and so this is it. Now, the first thing people say is there's no such thing, it can't be done. Well, I'm afraid there is such a thing. Here is a New York Times article on gold and silver price manipulation and how it's done. Now, this was published in 2010, and then the next thing people say, oh, of course it couldn't go on now. Well, I'm sorry, but it does. Very recently, a single Barclays trader was found being able to manipulate the price of gold on a global scale. If one trader can do it, governments can do it with ease. So, how do they actually manage it? Well, it used to be that they had to take terrible risks. It used to be they used to have gentlemen's agreement where a bank would sell an amount of gold bullion to somebody else on the unwritten but verbal understanding that that somebody else would then take them back the gold. So they would sell it but not sell it, and the stock exchange would record the sale, and if the sale was a big one and the price was fairly low, it would affect the global price and drive the global price down. But the bank in reality wasn't selling any gold. It was paying a third party, illegally, to actually do it a favour. Now, gold price manipulation has been made very much easier due to a thing called paper gold. And paper gold is basically a certificate that allows you to sell 100 times more gold than you actually own. Sounds bizarre. There are all sorts of weasel words in the certificate that actually say, well, we don't really have to give you the gold. Okay. Now, so paper gold can actually be sold with no gold changing hands, and this is very important because people don't wish to run down their stocks of gold bullion. And what has been found is somebody set up two virtual trading companies. They didn't actually trade anything, but they acted as if they would. And one of them ran inside the hours of the New York Stock Exchange, and one of them ran outside the hours of the New York Stock Exchange. Now, they found that the one that ran inside was always losing money. The one that ran outside the hours of the New York Stock Exchange was always making money. How come? And they looked at the figures and they found that at the end of every trading day, all of a sudden, whack, the price of gold went down, wiping out any profits they might have made. And this was such a repetitive pattern that it was obvious that somebody, i.e. most likely the Fed, was actually selling huge amounts of paper gold to drive the price down. So, the next thing that people say is, well, okay, so it goes on, why would anyone want to do it? And the answers, there are many answers. There are many good reasons for manipulating the price of gold down. And the first one is to make your currency look good. Now, if you take a look at a price chart for gold and look and see what happened between 2008 and 2009, the price of gold shot up to around about $1,600–1,700. Now, was this because gold had got more expensive? No, it was because the dollar had weakened. The dollar now is worth a lot less than it used to be. How much less? Well, That's the thing. The US government doesn't want anyone really to know. So what they do is they drive the price of gold down, because gold is the thing that everyone uses to compare currencies. They look at the price of an ounce of gold in pounds, the price of an ounce of gold in dollars, and from that you can get the conversion rate between the currencies. The one thing I will say is, if the world went back onto a gold standard, and it was a true gold standard, i.e., the price of gold was fixed, then in order for it to make any sense, with the amount of gold there is in existence, calculations have been done, and they have shown that if the world went back to a true gold standard, which has been talked about quite recently, that the price of gold, because there isn't enough of it to cover all the countries in the world, as some people would put it, and what they mean is enough at the current price, but the price of gold would have to go up to somewhere between $17,000 and $19,000 per ounce. That's if the world went back on a gold standard with the amount of gold that exists in the world today. And those calculations have been done. Now, another proposal is a kind of a partial gold standard, where, okay, the money's still redeemable for gold, but it's not redeemable, if you like, in the full amount, say half the amount. And the calculations have been done for these, and it seems like the price of gold in that case would be around about the $4,000 to $5,000 an ounce. Still a heck of a lot higher than the $1,230 an ounce it is today. So that's why people want to manipulate gold. Now, the Barclays trader, the individual trader who successfully manipulated the price of gold down for one day, his reason was that he had a client who had made a bet that the price of gold would stay over a certain amount over a certain period of time. And sure enough, just before that period of time elapsed, suddenly the price of gold shot down. Now, there's a number of different ways that are used nowadays to manipulate the price of gold. One of them is called naked short selling. What that means is that you sell something but without actually having it, which in theory is illegal, but in practice nobody ever seems to get prosecuted for doing it. So what actually happens is, a large bank will say, we're selling 500 tons of gold at $1,000 an ounce, trying to set a new price. Sure enough, they get the hand bitten off, and somebody says, yes, I'll have that, here's my money. Then they turn around and say, well, we don't actually have it, sorry, we'll have to cancel the trade. And they cancel the trade, they give the guy's money back. But by then the computers have picked up on the fact that gold is now traded at $1,000 an ounce, or whatever the price was, and the prices across the world that everyone sees on their computerized trading systems drop accordingly. Now, this method of doing it is supposedly illegal, but no one, as far as I'm aware, has ever been prosecuted for it. Another method is the one that I mentioned earlier, where you're friends with somebody in another company, and as part of a series of favours being swapped between yourself and this friend, you turn around and say, well, can you do me a favour? I'm going to sell gold at such and such a time in the day precisely, and I want you to buy it. So they sell physical gold, they buy physical gold, the other person buys the physical gold, no gold ever moves, and through some back channel the person who was supposed to have bought it gets their money back. But the same thing happened as before. The computers see the trade, the price of the commodity, in this case gold, is driven right the way down. And these are the ways basically that gold is manipulated. There's another couple of ways of doing it, but they're very technical and involved and would take about an hour to explain. So there you go. And I hope you've enjoyed the little slideshow. It's probably better than looking at my face, especially at the moment. I'm feeling a bit tired and washed out. Never mind. If you like it, just obviously click on like, subscribe and all the good things, and I'll talk to you again soon.